Hey Brian, good morning. How you doing? So make sure you guys can see me okay, can hear me all right. Put into the chat, let me know. I do sound a little bit nasally, a bit under the weather. Hope you can still make sense of what I'm saying. Hey Pips Apprentice, good morning. How you doing? And I will be doing that a lot today, maybe over the next couple of sessions. Hey Jumarinas, how you doing? Hey Jimmy, yes, I am back. It has been, I just counted, I was in the UAE on and off for almost more than 2 weeks for this month. So about half the month I was there, shuttling between Dubai and Abu Dhabi. So I'm back. I don't think I have any trips planned on the horizon, on the near-term horizon. So yes, I think we're back to regular routine on our live streams, so you can count on that. And I'm trying to sort out the schedule so that whenever I do travel, I can also make out a live stream. It's just been so packed. It's just been so packed. And if you guys are following me on any of my social medias, on LinkedIn, on Instagram, Facebook, you would have seen that I've just, on my last trip, I was invited to do a podcast with Tickmill, right? I did a podcast with Tickmill. They are finalizing and about to release that, so do make sure you stay tuned for that. When that does get released, I will share that out with you guys as well. My voice and everything is going, so I'll see how long I can last with this. I want to just make sure that it works, the stream works across the board. At least I know that audio and visual is working, so we'll give it a minute before we get started. Today is Monday, so we'll do a broad overview of what could happen over the week ahead. So it's navigating the trading week ahead. We have many big news events for this week. We have the RBA with the interest rate decision. We have their BOJ with a potential interest rate decision as well, or indecision. We have the FOMC most likely holding rates at the current level. We have the BOE with their rates decision as well, and also the Swiss National Bank, the SNB, with their rates decision as well. So massive week this week, or massive news this week. Not quite a super week yet because we are missing the ECB, but still quite a big one. Okay. Hey YJ, how you doing? Good morning. All right. Okay. So again, if you are new to the session, do drop a message, say hi, let us know where you're joining us from. The link for the Discord channel is there for you guys. If you haven't already, I think most of you have, but if you haven't already, do make sure you join us on Discord. That's where you can ask the questions, have a trading community there for you guys. It is absolutely free to join. And for all the regulars, a big welcome back. Thank you for joining me again, despite the more than two week break, or intermittent break that we've had with our live stream. So good to have you back. Good to be back. It feels like it's been a long time since I've done this session. And hey, I do know that many of you have caught my impromptu live streams as I was walking through Dubai. Let me know if you enjoyed the live streams. A lot of it was quite badly taken. I was just holding my phone walking around. So I was bumping around. You had bad angles of my face and all that. But do let me know if you enjoyed the sights and sounds of the UAE. All right. Hey, Alam, how you doing? Good afternoon. With all that said, a quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. So please do your own due diligence, as the contents of this webinar are not intended to be a recommendation to trade a financial product, as your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Right, that's it. Oh wait, get rid of that. Okay. Hey Kalinzi, how you doing? Good morning. Good to have you. Hey, Mr. Matsa from South Africa. Good to have you. How are you doing? Hey, Goju. Welcome back. Good morning. Now, just going to give you an overview first of what's coming up. Yeah, I'm back, but not well. On the second last day of my trip, I had a massive, dip in energy, and it just hit me. Traveling does take a toll, so I'm fluey. I'm on medication. I'm taking all kinds of stuff. I've got my ginger tea. I don't think you guys can see it. Where is it? Yeah, my ginger tea. So hopefully that makes me feel a little bit better. But yeah, I'm still here. I'll just talk to you. I run off my voice, and then we'll see how it goes. Okay. Okay, so what we have this week is quite a big week. Today is going to be a little bit quiet. I've seen market. I was trading a little bit as I was away, just setting positions, setting trades in, letting it run, going off, doing my stuff, coming back. A lot of it hit my take profit because I had quite a close take profit, about 20-30 pips profit, so it hit. I do know that a couple of it hit my stop loss as well. Overall, net still profitable over the last couple of weeks. So how did you guys go with your trades? Put into the chat and let me know, how do you go with your trades so far? Man flu. Yeah, I should be in bed with my blanket up and just whining and ringing a bell for help. Not quite a man flu yet, but almost there. Okay, so Monday, not much happening, right? Take it as a bit of a preempt into tomorrow, because tomorrow we do have early morning monetary policy statement to be released, most likely at about that 10 something a.m. period. Then we have the BOJ policy rate minus 0.1, expected to stay at minus 0.1, but like I was sharing with you guys on the Discord channel, the headline here where Goldman Sachs now expects the Bank of Japan to hike rates on Tuesday. Right, so where was it? I think BL was sharing on the Discord channel about how the Bank of Japan they are more likely to hike rates or have a monetary policy tightening in April, but they refused. They were not taking off a possibility of that in March. So now with the Goldman Sachs coming out saying that, hey, Bank of Japan might hike rates on Tuesday, I think it's well and truly back on the table. Not ruling it out, but I'm going to look at it as a scenario where we're going to plan to say, okay, if they stay at this level, they might, on the monetary policy statement, put in comments to talk about adjustments, if not now, into April, right? Then it's still likely to have that same impact on the yen, which would be a strengthening of the yen, okay? Again, there is now a divergence in policy between the US or most other central banks and Japan, because Japan has negative rates. Everyone has raised their rates to where it is right now, to their current levels. There's a divergence. And then there could be another divergence, a reverse divergence again, where the Bank of Japan might be hiking rates, might get onto the path of hiking rates, while the other major central banks are going to embark on a path towards reducing rates, cutting rates. So again, first they were diverging that way, and then now they're going to diverge or converge and then diverge back again. So that's going to be interesting. We'll stay tuned for that. I'm actually very tempted to go live in early tomorrow, right? Or through tomorrow, because I might want to go live together with you guys, or most likely I will go live together with you guys for the BOJ rate policy. And then at 11:30 we have the RBA with the interest rate decision. Not expecting a surprise here. 4.35 to stay at 4.35. The rate statement, right? They tip to keep interest rates on ice, to keep it on hold. So I don't think that we're going to see big surprises here from the RBA, but it might lead, some speculation might lead to a bit of a push to the upside on the Aussie dollar. So we'll watch out for that. We have the press conference from the BOJ, not too particular about that. Late tomorrow night, 8:30 p.m., we do have the CAD with their CPI, with their inflation growth rate. Median CPI year on year 3.3, staying at 3.3. We're looking at it staying at the current level, which is very close to its target level, but it's not there yet. 3.3, 3.4, it's very close to the 2 to 3% target level, but it's not there yet. So we might actually see a little bit more of a temptation or speculation that the BOC might think about, if it stays at this level, and it's been staying at this level, slowly dropping, are they going to start talking about, not now, but into the future, into the next BOC release, whether they're going to start talking about, or whether it's going to get in time for the next BOC for them to start talking about a rate cut. All right, so it's getting to that point. And then you get a bit of a breather on Wednesday with the CPI, only the CPI from the UK to be released from 4 down to 3.5. So showing likely to show some good progress in a slowdown in inflation growth. Likely, I think that we might see that happen. So it's been a bit sticky. It's been a bit sticky on that 4% level. So if we do see it drop to 3.5, we're likely to see some big downside move on the pound because a drop from 4 to 3.5 on inflation growth is going to factor in to the, to the Bank of England's interest rate decision here, right? Not so much that they're going to cut rates, but the voting might actually be skewed, might actually be affected if the inflation growth does go from 4 down to 3.5. So this is something to watch out for as well. Through to Thursday, early Thursday morning, this is the time where I wish I was still in Dubai, because it would be 2 a.m. here in Singapore, GMT plus 8, where the FOMC will be releasing their interest rate decision. In Dubai, it will be a nice 10 p.m. Trading session. I will be staying up for this. I don't know if you guys want to hear me talking at 2 a.m., but we'll see how it goes. I don't think it's going to be a big price mover. I don't think you're going to see massive volatility, because we are at a here we go, where are we? We are at a 99% chance that, or 99% chance probability that the FOMC is going to keep rates on hold at its current level, right? So the only time we're going to see a big surprise here, or massive volatility here from the FOMC on the dollar, would be if they surprise markets with a rate cut. Very, very unlikely, right? Or during the press conference, Chair Powell says something like, we haven't done it this time, but we'll do it in the next meeting, right? In the next meeting. But, unfortunately, against what I've always wished for, in May, on the 1st of May, they are right now at a 94.6, almost 95% chance of keeping rates at the current level. So again, it looks like the FOMC is going to hold steady through in March, through April, and through to May, right? Unfortunately, it looks like that's the case, where rates are not going to change until we get to June, where we have a almost 50-50 chance. I'm sure this number will change as we go through, a 50% chance that they're going to cut rates. So no big surprises yet. I think that what's going to happen, or how I'm planning it, is what's going to happen from now till a rate cut. We're going to see spikes and fluctuations, but no massive change in direction unless something else develops. Okay, so that's the FOMC 2 a.m. GMT +8 on Thursday morning. Employment numbers for the Aussies, PMI numbers for the Eurozone. We do have the Swiss National Bank with their interest rate decision. I don't usually trade the Swiss policy. I don't actually trade the Swiss policy rates, staying at 1.75, likely to stay at the current level. Again, with the Swiss National Bank, you can never rule out a possible surprise. No, you can never rule out a surprise. I've seen them surprise markets from memory, from easy memory. I've seen them surprise markets twice already. Could be a little bit more than that over my last almost 20 years of, wait, how long was it? 15 years of trading. I've seen them surprise markets twice already, so we can't rule that out. But most likely going to stay at 1.75%. And then 8 p.m. GMT +8, we have the Bank of England with their interest rate decision. Again, look at this voting. It was 216. 216 means first number is how many people voted to increase rates. It was very surprising that we had 2 members voting to increase rates. Second number is how many voting to cut rates. And the third number is how many voting to hold rates. So it was 216. It's expected to go to 018. 018 means 0 members voting to increase rates, 1 member voting to cut rates, and 8 members voting to hold rates. Just changing from 216 to 018 is going to have a impact on the pound dollar, because that's going to signal to the markets that the members from the Bank of England are going to be a little bit less bullish, right? The 2 members from a rate hike decision to a holding decision is going to signal a little bit less bullish, and might even signal a little bit of a dovish sentiment. Okay, so that switch from hike to hold and maybe even cut, that's going to signal a little bit of maybe some weakness onto the pound dollar. And then through to that Friday, we have some retail sales number for the UK and Fed Chair Powell speaking. And that's at the Fed Listens event in Washington, D.C. I don't think this will be a big one, unless, let me see again, opening remarks. Yeah, unless he gets questions. I don't think he'll get questions this time around. But if he gets questions about what he said during the press conference here, then we might see some volatility come back into play. But I think that what's likely to happen for this week, the plan, or my plan for this week, will be today, nothing much. Look at where prices are heading towards. Look for a reaction at levels. Tuesday, we're going to see the yen pairs move. We're going to see the Aussie dollar. We're going to see the CAD. And then through to Wednesday, a little bit of a breather, but looking at the pound. Onto Thursday morning, or Thursday, the whole of Thursday, we're going to look at the dollar, what happened there with, I'm going to ignore the PMIs a little bit, but I'm going to prime myself for the UK, for the pound dollar with the interest rate decision. And then Friday is back to taking a breather again. How's that for the plan for the week? Pip's Apprentice said it will be a good lesson for us if you go live, but only if you're well enough. I will definitely go live tomorrow. It will be very early for a lot of you. I think it'll be very early for a lot of you, but I think that's a good timing to go live. And then I don't think I'll do that one live because I'll wake the whole family for that. So I don't think I'll go live on that. We might, or we could go live on the Bank of England interest rate decision as well. Okay, so this could be many live sessions coming up. And I might actually make it live, only not streamed, but on Zoom for members on the Discord channel. So if you haven't already, do make sure you join us on the Discord channel. All right. Mr. Matt SA says, yes, I hope the ginger tea does help me feel better. Would love to see it drop to 3.5 for the pound. Let's have live FOMC. Live FOMC might be a bit of a push, but we'll start with the first one. We'll start with the first one and see how we go. Okay. So that's the plan for the week. Now, again, it is Monday. So on Mondays, we'll look at the charts on the H4 time frame. We look at the charts on the H4 time frame and try to identify bigger, not really bigger, but overall moves or top view moves. And then through the week, we'll look at H1 charts for the more intraday moves. All right, fair enough. And again, hey, I forgot this, but if you can help me out massively, do remember to click that like and subscribe button if you haven't already. Okay, so this is the dollar index since, when was it? Since the last time we spoke, I'll zoom in a bit. This was the non-farm payrolls, right? Non-farm payrolls came out at 275K. We saw the dollar index drop, tested the support level at 102.40, which was also very close to that 61.8 retracement level. Yes, in a live session with me. It could be with someone else. You could do it with someone else, but yeah, it would be with me. So we see the dollar index came down, tested this level. That's why I have my fib level, the first one from the bottom up to the top here, identifying this point at 61.8 as my support level, and from the top down to the low from Friday last week, 2 weeks ago. And then we see the dollar index, where is it? Let me see. It's gone up slightly past 38.2, and then now consolidating at this point. There we go. Okay, so what I'm looking at here, I'll put in a 50% level. What I'm looking at here is that you see that move to the dollar to the downside, right? And it's retraced. If it fails to break above this 50% level, if it fails to break above this 50% level here at 103.67, I do think that a continuation back down is likely, right? A continuation back to the downside is likely towards the immediate support level of 102.40. But bearing in mind that there are many other factors that could, not because of dollar weakness, but that could lead to the dollar weakness, is a strength across the board or other currency pairs influencing the dollar index. For example, the yen or especially the pound interest rate decision. So what I'm looking for is that on the dollar index, it needs to stay below 50%, which is the 103.70 level. I'm just rounding it, right, to maintain bearish view. Hey, Angel Case, how are you doing? Then it could trade down to 102.40 support. Okay, so it needs to stay below this level to maintain the bearish view, to trade down towards that 102.40 support level. which we have that 61.8 there as well. Beyond this point, the next key support level will be at 100.60. We do have some intermediate levels at about 101.50. Okay, so we'll look at that. So that's the overall view of the dollar index. Then onto the Kiwi. So we're expecting some weakness overall on the dollar index, right? Pushing back down if it stays below this 50% level. So because of that, what I'm actually thinking here on the Kiwi is that we've seen it bounce, right? We've seen it test and then bounce up. And we've seen that do it again, once on the 5th of Feb, again on the 13th of Feb. Hey, Lindsay's boss, how you doing? Hope you're well. And then we see it bouncing off again on the 14th of Feb. It came very close, right? So it came down to this point here at 0.6080, and then it's bounced back up. So right now it's at that support area, right? It's at that support area again, consolidating. If the dollar index does weaken, if it does weaken and push to the downside, what we could expect here is for the Kiwi to sit there and then push back up towards that resistance level that has held, which is at 0.62. Okay, so what we want to see is a breakout. This is on H4 time frame again, remember. We're looking at 0.61. Above 0.61, we have a stop loss of about 30 pips. We could have a take profit of a good 100 pips to the upside. Okay, so that's what I'm looking for. Consolidation. It might very well break down and bounce back up. That's fine as well. But I want to see it break above 0.61, 30 pip stop loss, 100 pip take profit there on the Kiwi dollar on the H4 time frame. So put this as well, H4. So Kiwi, we're looking at buying at 0.61, stop loss 30, take profit 100 to the upside. Okay. Then onto the Aussie. Remember again, tomorrow early 11:30 a.m. GMT +8, we have the RBA with their interest rate decision. No expectation for a surprise. They are likely to hold, they're most likely going to hold rates at 4.35%. The rate statement is unlikely to talk about a rate cut scenario. They're possibly going to just hold and wait. So because of that, you see the Aussie dollar now consolidating at 6562 or 6560. If you took that move up, you see that it's right at that 61.8 support level. No, not support level, but 61.8 Fib retracement level. Give me a second. I have someone knocking on my door. I will come back. 1 second. All right, I am back. Sorry about that. Okay. Lost my train of thought. Okay, so Aussie dollar, 61.8 retracement level is consolidating right there at this point. What you do have here is a bit of a opportunity, right? Because the RBA is not likely to talk about a rate cut scenario, right? They're definitely not going to be talking about rate hike scenario. They're staying put at that point. So what we're looking at is, again, dollar expected to zoom in a little bit on this. Let me do that. Right, we're expecting the dollar to weaken to the downside. So if that does happen, sitting at this point with a bit of an interim support, you could be looking at about 6580. Stop loss quite wide at about 40 pips. Take profit, you could go up to 72, right? We do have a tail here that would make it about 80 pips. You could go to 80. That's my resistance area. You could take that point as your resistance. So we could have that trade. It could, one thing that could happen here is that the Aussie might, you see it already pushing up a little bit right now, right? You see it already is trying to push up. So it might happen even before the news. And that's why I gave it a little bit more space. It's currently at 6565. I give it a 6580. It might push up before the news. If it is anywhere in between here tomorrow, I wouldn't do anything unless it breaks above that resistance. Then we could be looking at further upside potential. Okay, so what you're looking for is for the Aussie to consolidate at this current level through to tomorrow with the news, break out above 6580, look to buy it up, stop loss 40, take profit 80 to the upside. That'd be a good trade. If not, oops, let me move that away. Take that away for now, right? If not, then if it stays somewhere in the middle, then we'll be looking for it to break that resistance to trade further up. So Aussie 6580, 40 pip stop loss, 80 pip take profit to the upside by 0.648, 6465, 6580. 580. Hey Sirin, how are you doing? Stop loss 40, take profit 80 to the upside. This is with the RBA decision as well. Okay, so because we're looking at this on the week, so this will say it's on the Tuesday, RBA decision. I like what I'm seeing here on the dollar, possibly pushing back down. Okay. You can see that pushing back up already. Okay. Then onto the yen. I traded quite well on the yen as it was pushing down and also as it was finding that support and bouncing back up. Right now, the yen is in no man's land. No man's land. No person's land. Let's not be gender biased, but no person's land. Because the support level down here at 146.53 is reasonable. We have this area here and this point here. So that support is good. We have our resistance here at 150.84 or 85, which we've seen it test many times over, which is good. So no reason it's right in the middle. I shouldn't be trading it unless what we're going to see is the yen now slowly creep up and then turn back down. That's what I would be looking for on the yen. Why I think it's going to creep up despite the dollar weakening, potentially weakening, is that you can see the yen on a bit of a channel to the upside, right? Badly drawn channel, but you can see that channel to the upside. So we're looking at that pushing the yen up. If you look at this as well, is right at that 61.8 level. All right, so if it does consolidate there and then break to the upside, we might see this continue trading higher. I want to see it test that resistance and then turn back down. Could it turn down from here? Yes, I think it's a little bit more risky because of the Bank of Japan news tomorrow. So this is what a bit of a, if you're going to take on a little bit more risk, If you want to take on a little bit more risk, you could be looking for a rejection of 61.8 and then looking to sell down, say about 148 dot, no, a bit lower, 148.65. Stop loss is very wide at 70. I don't like that. Your take profit could be big. Let me think. If we did this, we want it to go past, at least past 23.6. So I would say 148.50. Your stop loss, I would say 50 pips. And then your take profit could go down to almost 200 to the downside. Okay, so that's why I think this is a bit of a riskier trade, because if it rejects here, it comes back down, you could get in early, again, even more risk with the news pending tomorrow. I think that's one option here, but a safer option, which might or might not play out, is for a test and reject back down. Okay, so I'll highlight these two here for you guys. One at 148.50. Stop loss at about, I would say even 50 pips. No, I would keep it there. So 80 pips, stop loss. Take profit, 200 pips to the downside. So adjust, you would have to adjust your lot sizing on this to maintain your risk exposure, or look for it to test and reject. You have a tight stop loss of 40 pips. You could trade it down firstly 140 to the downside, and then maybe a continuation back down again. Okay, so there's the two options there on the pound, on the dollar yen, looking for a drop back down. So dollar yen, first one, we're looking for the riskier one. We're thinking that 148.50, 80 pip stop loss, 200 pip take profit. 148.50, sell at 148.50, stop loss 80, take profit 200. Or we're looking at a longer wait. Then we're going to sell at 150.60. 150.60, 40 pip take stop loss, 130 pip take profit. Okay, 150.60. Stop loss 40, take profit 130 to the downside. Again, you want to remember that we have the BOJ on Tuesday. We have the BOJ policy decision. Okay, there we go. I think that's going to consolidate a little bit more. I would rank this quite low. I would be very careful with this. What could happen is a scenario where it would drop and then push back up. So just be extra careful if you're going to take on the riskier approach. Okay, and then onto the pound dollar. I think it's worthwhile redoing this chart. Okay, so let me have a look at this. Pound dollar and H4 time frame. We know that we have this point here, which was that previous high. It's right there. Okay, that's one done. And then we know we have the support here at this point, which is the support here. I'm happy with those. I drag this right across just to show why I think that that's a good support area. That's fair. If I took this, doesn't make sense to take this. That's 38.2. We can do that just to highlight a couple of levels. And then I'll do one more here at this point, which doesn't actually, there's actually no point doing this. Let me just check again. That's fine. I don't think there's a reason to do that. Okay. I don't think we need that. I don't think we need too much of that. We put in 50 and 61.8. So we have this move on the pound dollar. Well, we see pound dollar ranging in a relatively wide range, right? Pound dollar is in a relatively wide range since December, right? It's gone up, down, stayed within the range. The slightly tighter range would be there, but then it broke out and it came back in. So what I'm looking at here again is dollar weakness, expecting that dollar weakness all the way through to Thursday, right? The dollar weakness all the way through to the rate decision, and we might see that weakness continue with that rate decision. I'll update you all as we go through the week. At this point, if it stays above that 50% level and it stays above this area, if the pound dollar stays above this area, we can see it push back up. Dollar weakness pushing the pound dollar up. I don't actually think that there's a good I don't think there's a good 140 pip move to the upside. In fact, wait, let me just check that again. I think that might be a bit optimistic to expect. I think that's a little bit too optimistic as well. I think we could take that away because there's no reason why the yen for now should move up like a good 140 pips, 145 pips to the upside, right? So most likely I think that it's going to consolidate here and push down. Let's do that one. I don't think that there's that reason there. Dollar weakness push that down, yes. So I think that this could push up. We highlighted this point, but what I'm actually looking at is this point here. No, okay, I know what I'm doing now. So what I'm actually looking at is dollar for the pound dollar, it needs to stay above this 50% retracement level and this 61.8 retracement level to push back up. What I'm looking for is a buying opportunity. It's two moves, okay? What I'm looking at is two moves on the pound dollar. First one is a push back up because of that potential weakness to push back up, and then after that looking at maybe a push back down again on the pound dollar, because if they do move from 216 to 018, we're going to see possible weakness come back into play on the pound dollar. Okay, so what you can be looking out for here would be above this point, trade it up. I don't like it. I don't like that move back up. I don't like waiting for it. What I mean is, I'm thinking that maybe even something quite quick at 1.275, 1.2760. Take profit could be 100 pips to the upside. Stop loss could be right there at about 50 pips, just below that 50% level. And then after that, you could trade it back down again. So that's the first move. We look at that as the first move. And subsequent moves, we can update through the week. So pound, dollar, we're looking at a possible buy at 1.2760, 50 to 100. 1.2760760, yep. Stop loss 50, take profit 100. Then we can look at that pushing back down. I'm also considering right now if there are any opportunities if the dollar does not weaken back down but instead pushes back up, which I don't see it here at this point. Onto the euro. Euro, because you can see we talked about the Aussie, we talked about the yen, we talked about the Swiss National Bank, the FOMC, the Bank of Japan. The ECB is relatively quiet or not scheduled for anything this week. I think that we could have the opportunity for that counter scenario, right? If the dollar does not weaken, instead if the dollar pushes to the upside, breaks above 50 and pushes to the upside, then we could see the euro break lower, right? We've seen it test and reject that 61.8 level on Friday. It came close again on Thursday on the 14th. Now looking like it's pushing a bit, sitting on that support level. Right, I would say right at that point there. I'm happy for this to be my resistance. That's my big resistance, yes. That's my interim, and that's my next big support level down here. So what I'm looking at is if the dollar does not strengthen, does not weaken, and it strengthens instead, then we could be looking to sell this down. Let me just double check one level again. Hey Atir, how you doing? Hey Vinduhan from Sri Lanka, good to have you with us. Pips Apprentice is looking for sells on the pound dollar. I think that on the pound dollar it could be, but it's just a little bit early right now. Unless it breaks below 61.8, then yes, you could be looking for that sell, but as it sits there, that might hold. So just be careful of that. Euro dollar on, I'm looking at this, 38.2 makes sense. So we're looking at this, if it does push back down, then you could be looking at 1.0860, stop loss about 30 pips, take profit close to 60 to the downside, and then you have more potential if it continues or has a good momentum pushing lower. Okay, so that's what I would do. Update this as well. We have Thursday BOE position voting. Okay. All right, so this is an alternate scenario that we're looking to sell at 1.0860, stop loss 30, take profit 60. 1.0860, stop loss 30, take profit 60. This is if DXY strengthens. Okay, it's consolidating right now. Okay, could it push back up? Yes, it could. I wouldn't be looking to buy back up. I think we have a lot of other setups that we're looking on that dollar weakness scenarios. I think this is a worthwhile dollar strength scenario. Then onto the US Swiss franc, very messy chart, take all that away. What we're going to focus on now is that top being the resistance, that bottom there being the support, sitting in that range. Drag this resistance out. You can see that I'm slurring my words already. You can see that's fine. I don't think this will play out with any levels. Let me just check. Yeah, so 61.8 is just broken, so that doesn't matter. Take that one away. Beyond this point, the next big resistance would be up here. And then the next big support will be down here. There we have it. Okay, so again, remember on Thursday, we do have the Swiss National Bank with the interest rate decision holding, likely to hold at 1.75%. Not expecting a big surprise there from the Swiss National Bank. Who will hike, who will not cut? I think most of them will not cut. What I'm looking for, what I would be looking for here would be a test and reject. Look at this range. It has been quite well respected since Feb 14th, 1st of March. Now looking like it's pushing back up a little bit. What you could look for is a rejection of the resistance back down again. Okay, so what I would be looking at here would be 8860, tight stop loss, no more than 35. Take profit back down 105 to the downside for the US Swiss franc. Okay, so here we go. We're looking to sell at 0.8860, stop loss 35, take profit 105. And this is Thursday SMB position. Okay. Hey Nikki22326, how are you doing? Good morning. In the meantime, yes, please let me know how you're finding the session again. Just want to know that we're all good, we're all on track, you're all happy with the session. Let me know. I think that's okay. We do have an interim level at about that point. Yes, put into chat. I would like feedback. I always like feedback on how you guys find the session. If there's anything better that I can do for you guys as well. Okay. Then onto the USCAD again, very messy. Clean it out a bit. Big resistance here. Remember, CAD, we do have tomorrow. Tomorrow we have the CAD CPI numbers to be released. Might see some weakness come back onto the CAD. Weakness on the CAD is going to lead to a push to the upside. Now, if the dollar does weaken, this just pulled back a little bit, but if it does weaken, then we're going to see this push back down or pull back down towards this 1.3440 support level. What I would be looking for in this case would be a bounce back up. So that would mean that I'll be looking at about 1.3455. Stop loss about no more than 30 pips. Take profit could go 120, 130 to the upside. Again, please remember that these are trade setups identified on the H4 time frame. That's why we have relatively wide take profit levels. It's not that you have to wait for or you have to make the trades hit or let it hit its take profit level. You can always close out earlier, right? You always have a reason to close out earlier, and in this week especially, one of the good reasons to close out earlier is pending news release, right? Because for example, today or tomorrow you could be looking at the Canadian dollar or the loonie. Look, with the news release, you get in on Tuesday. You might be thinking, okay, it's come down, it's bounced, I get into a trade on Tuesday. You don't have to hold it all the way to 130 because we do have on Thursday the FOMC, and that could cause significant volatility on the dollar index, although I'm not expecting it, but it could. And then, you know, you could be in profit and then it'll spike down and close you out again. So you don't have to hold it all the way to take profit. That's where I would identify a take profit level, but you can always close out anywhere in between. Just keep that in mind, all right? So we're looking at this to buy at 1.3455, I think. Yes, 30 to 130. Stop loss 30, take profit 130. We have the Tuesday CPI release. Okay. And then, lucky last, on to gold. Look at what gold did. Look at what gold did. We haven't looked at it for a couple of sessions, and it has just blown past everything. It came just shy of 2,200, 2,196 it got to, right? And then reverse back down. Why did it get all the way back up there, right? Despite the dollar also pushing back up slightly. So this move on the dollar pushing up should have seen a bigger move back down on gold, but it did not. We saw that pushing up instead. You have an interim level because of that tail there, right? Then you have this big move up. You see why it stopped there. Firstly, because of this point. Secondly, because of 23.6. And then my next level would be down here. Okay. There we go. Take all of that away. That's what I'm looking at this point on gold. If we're expecting further downside or continuation of the downside on the dollar index, then we should be expecting gold to push up towards that 2200 level, right? So it finds support at this point and pushes back up towards 2200. That's what I'm looking for on gold. Short-term view, I'm not going to think too much on gold because very likely it's going to get to 2200 and retrace back down again. So I'm looking for gold to bounce off 2150 to retest high of 2200. Okay, and there we go. In a nasally, thank you so much, Goju. Thank you. Thanks, Nikki. Appreciate that. Thanks, Goju. Appreciate that. So in a nasally fashion, in a very nasally fashion, we have gone through the various major currencies on the H4 time frame. If you have any questions, please let me know. And if you haven't already, please help me out by clicking that like and subscribe button. And if you, again, the link for the Discord channel is there for you guys to join. And I will be posting a link up onto Discord for you guys for the live stream. Not live, yeah, the live session, the live trade together session. Okay, so for now, trade well, trade safe, take care. I'll see you all tomorrow with the BOJ and the RBA news release. Take care now. Thank you, everyone. Bye.